Welcome to Earnings Central. In this video, we'll break down StoneCo's fourth quarter fiscal 2024 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q4 was $579.2 million. The company actually reported revenue of $582.2 million, surpassing expectations slightly by 0.5%. However, this quarterly revenue marked a 12.9% decrease compared to the $668.3 million reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q4 was 32 cents. The company actually reported an EPS of 36 cents, exceeding expectations by 12.5%. However, this result was flat compared to the 36 cents per share reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. First, let's look at MSMB TPV, total payment volume, which grew 22% year-over-year to reach BRL 454 billion for 2024. This metric represents the total value of transactions processed through Stone's platform for micro, small, and medium-sized businesses, which is the company's core customer segment. While card TPV grew at 15%, the stronger overall growth was driven by the rapid adoption of PIX, Brazil's instant payment system. Retail deposits reached BRL 8.7 billion by the end of 2024, exceeding the company's guidance of BRL 7 billion. This represents impressive growth of 42% year-over-year and demonstrates Stone's success in becoming a more comprehensive financial services provider for its merchant clients. The growth in deposits outpaced TPV growth, indicating stronger engagement with Stone's banking solutions. The credit portfolio hit BRL 1.2 billion, significantly exceeding the company's target of BRL 800 million. Despite this rapid growth, loan quality remained healthy with NPLs over 90 days at just 3.61%. This demonstrates Stone's disciplined approach to credit expansion following their 2023 credit relaunch after previous challenges in this segment. Adjusted gross profit, a new metric Stone is emphasizing, grew 13% year-over-year to reach BRL 1.7 billion in Q4 alone. This metric reflects revenues minus cost of services and financial expenses, providing a clearer picture of Stone's ability to monetize clients through multiple products including payments, banking, and credit. The software segment delivered a surprisingly strong performance with margins reaching an all-time high of 21.6% since the Lynx acquisition. Revenue in this segment grew 15% year-over-year, while adjusted EBITDA jumped 54%, reflecting increased operational efficiency despite strategic uncertainties for this division. Finally, the company reported a return on equity of 27% for 2024, representing a significant 5 percentage point increase from 2023. This improvement reflects Stone's effective execution of its strategic priorities around winning new clients, engaging them more deeply, and scaling efficiently. Now, let's shift focus to some of the key insights and takeaways from the earnings call. First, PIX adoption is accelerating beyond Stone's forecast, which actually caused them to miss their card TPV guidance slightly. While card TPV grew 15%, PIX volumes grew at a much higher rate, effectively cannibalizing debit volumes and cash transactions. Stone is embracing this shift by developing new PIX-related products and incorporating PIX volumes into their long-term guidance. The company's take rate strategy is showing strong results, with the MSMB take rate reaching 2.55% in 2024, exceeding guidance of 2.49%. Management noted they chose not to raise prices in Q4 despite rising interest rates, prioritizing merchant relationships during the critical holiday season. However, they've implemented price increases in early 2025, which they report are being well received with minimal churn. An important trend is that deposits are growing faster than TPV, reaching 6.8% of MSMB TPV in Q4 compared to 5.8% a year earlier. This indicates clients are increasingly viewing Stone as their primary financial provider rather than just a payment processor. Management expects this trend to continue as they enhance their banking features and workflow tools. Stone announced a new funding strategy that will be EPS accretive. They plan to convert a significant portion of their retail deposits into time deposits by issuing certificates of deposit. This will reduce their funding costs, but also decrease floating revenue, with the net effect being positive to the bottom line. This rollout will happen throughout 2025. The company identified BRL 3 billion in excess capital based on a new capital allocation framework. They've already returned BRL 1.6 billion to shareholders through share buybacks in 2024 and have BRL 900 million remaining in their current buyback program. Management indicated they'll continue returning capital to shareholders when value-accretive growth opportunities aren't immediately available. Finally, Stone is reevaluating its software asset strategy. The company took a BRL 3.6 billion goodwill impairment charge on its software assets after determining that owning these assets isn't essential for executing their cross-selling strategy. While they've received several offers for these assets, none have met their assessment of intrinsic value. For now, they'll continue maximizing the value of these assets while focusing on their core financial services business. Looking ahead, Stone has simplified its guidance approach for 2025, focusing on adjusted gross profit and adjusted basic EPS as the key metrics. They expect adjusted gross profit above BRL 7.05 billion and adjusted basic EPS above BRL 8.6 per share, representing year-over-year growth of 14% and 18% respectively. In conclusion, StoneCo's Q4 and full year 2024 results demonstrate strong execution across their core business segments despite macroeconomic challenges. Their growing deposit base, expanding credit portfolio, and strategic capital allocation decisions position them well for continued growth in 2025 and beyond. That wraps up our recap of StoneCo's fourth quarter fiscal 2024 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.